When I was 26 years old, I had made the biggest purchase of my life so far. I walked into a car dealership with my dad, obviously, and I bought everybody's dream car, a 2013 bright blue Honda Fit with cellulite, also known as hail damage. So I lovingly nicknamed her Bubbles. I was really nervous about buying this car for all the reasons you'd expect. It was my first car. So, am I getting a good deal? Is this a good car? Should I just keep the money and walk everywhere? At that time, I was very risk adverse. I hated debt. I was working to aggressively pay off my student loans, and I was making a big move from Texas to Colorado, figuring out what the heck to do with my life. Signing up for car payments and paying $2,000 down for my first car made me feel really nervous. The dealership that I worked with created an indirect loan to finance Bubbles with a local credit union. And before this car purchase, I had never been a member of any credit union ever. So this was my first experience working with any credit union. The first thing I should mention is that after adding Bubbles into my life, I still did not know that I was a member of a credit union. This feels like a missed opportunity for them. I would have been an incredible and probably lifelong member for them, but here's what happened. I love Bubbles. She took me everywhere, all throughout Colorado. She has a ton of cup holders, which we all can agree is very important. And after a year or so, I thought I could find a better deal on car insurance. I was doing the snowball method to pay off my student loans, and I found some savings to switch insurance carriers. So that's what I did. Better deal, same exact coverage. And for some reason, the communication did not go to my credit union about the change in coverage. I thought my broker would take care of this, and that didn't happen. The credit union therefore thought that I was driving their asset around uninsured. So I got a letter in the mail asking for proof of insurance. I followed the instructions on this letter, emailing in my proof of insurance. The response I got was asking for the declarations page, so I sent that in via email. I got confirmation that my account had been updated. I then asked, "Is there anything else you need from me?" I didn't get a response. 19 days later, I received a bill in the mail showing me that I had a late payment, which I did not. I was instructed to go online to sort this out. Keep in mind, I still did not know that I was a member of a credit union. Listen, I know that sounds like silly. I was so disconnected from a place that says that they exist for their members that I had to ask, where do I log in and what is my account number? Any other communication that I had with them is via email. Then I got another letter in the mail asking me for proof of insurance. And this letter said that the credit union was adding $1,400 to my almost paid off loan. After getting confirmation that this was taken care of, I was furious. And I did not trust this institution. Why would I? After phone calls and me being told to just throw away the next few letters that might say I don't have insurance, I paid off that loan even faster than planned. And I left that credit union forever. And I mean forever. They had an opportunity for a lifelong member at 26 years old, and their forced-placed collateral protection insurance destroyed that relationship. And to be completely honest, it kept me away from working with credit unions again for years. I felt like they had antiquated systems and they didn't care about whose money they were managing. If your credit union has forced-placed collateral protection insurance, you have members that want to or will be leaving because of it. There are more responsible, member-friendly ways to manage this risk, and I'd love to share our better solution. Head to creditunionsfirst.org or message me here to hear about it.